Hello and welcome back to yet another exciting week on the stock market. In today's episode, we will be looking into why most new investors start losing money, and then we will look into my portfolio and the news, and of course, answering some questions from the audience. So why do most people lose money when they start investing? Just take a look at my portfolio. I am down more than 16%, even though I think I have done quite a bit of research of every single company that I own. But whenever there is a shock in the market, meaning something that affects the market entirely, you are not able to predict that. And if you are only here for short term, like a week or 2 weeks, then you will most likely lose money. So that is why I'm trying to focusing on the long term and believing in the companies and keeping them even though they fall dramatically. My biggest holding is down more than 30%, and I'm still keeping it because I think it will be able to rebound eventually. It may take a year, it may take 5 years, but as long as I'm not selling, I have actually not had the loss. And that leads to a very interesting point. Don't invest more than you can afford to lose. If you are putting yourself in a position where you are forced to sell, then you have simply done a poor job and should not have invested that money. So I am confident of keeping my holdings even though they are down so much, because I truly believe in the long run they will be worth more than what I paid for them initially. There are videos all over YouTube about people doing day trading, and most of those people are using an enormous amount of leverage, meaning that they are borrowing money in order to invest. And for the majority of those people, they end up losing everything that they have invested plus everything that they have borrowed. So it is by far the quickest way to lose all your money, simply because they put themselves in a position where they are forced to sell. Of course, there will be some single few individuals which will make a fortune, but it's like playing the lottery. Why not turn the situation around and put the odds in your favor when all it requires is that you are patient and do your research before investing? Try to look at your portfolio as if you have bought a piece of real estate which you are trying to rent. As long as the rent is paid to you, you do not care whether or not that piece of real estate is going up or down in value. You only care about the price of the real estate when it's time for you to sell. Translated into my stock portfolio, I do not care whether or not the stock is going up or down in value as long as they keep paying the dividend. Because in the long run, they will be worth more than what you have initially paid, as long as you are patient enough. Of course, I am very well aware of the fact that that is not always the case, because from time to time you will see companies going bust. And that is why you diversify your portfolio and acknowledging the fact that in some cases you will be wrong and the company will go bust. That is why I have put in the guidelines. If the company slashes the dividend, then you should really consider selling it, because that means that there's something really wrong. Or if you simply lose faith in the company, meaning that they are producing a product which is no longer relevant. Let's take an example and say, for instance, you think oil, that was a pretty good invention when we had it. We really had a use for all that energy, but now we have discovered so many other different sources of producing energy, so oil will no longer be relevant because there is a more efficient way to get energy. Then you should also really consider selling, because the stock will most likely not increase in value anymore, and they will most likely slash their dividend as well. So let's go back to my portfolio, and let me start out by addressing a question that I have received regarding the portfolio. Aren't you sorry that you have put in all that money in the beginning of the year, since now you would be able to make much better deals? And my answer to that question is, it's a waste of my time and my energy to feel sorry about something which I have absolutely no idea would have happened. I could have played the lottery instead and have a better chance of winning than guessing that this would have happened. So instead of wasting my time and energy on that, then let's focus on something which I can actually do. Because when I'm investing now and I pay dividends from the holdings that I have, then I am actually able to get bigger pieces of those companies compared to what I have initially done. So what have I done to my portfolio within the week? Well, let's start by jumping into the dividends tab, and immediately we notice that I have received $120, which is almost 3 times as much as I did in the month before. So let's give a big round of applause for the companies which have paid a dividend within the week. And the winners are LTC Properties with just shy of $7, Simon Property Group with almost $50, Ford Motor Company with just shy of $14, and finally Wells Fargo with almost $50. So in total, $120, and I have decided to reinvest all $120 and added some additional cash as well. So I have invested $240 into Disney, $500 into General Dynamics, and finally I have acquired a new holding in Starbucks where I have deployed $500 as well. So in total, $1,240. So I am sticking to my long-term strategy and at the same time acknowledging that I won't know when we will hit the bottom in this current market situation. So as I mentioned last time, I'm dollar cost averaging and I will keep doing that as long as I have money available. So whether it will just be my dividend or if I have more savings, then I will keep reinvest or just invest in new positions whenever I think that there is something which has an attractive price for me. Now let's take a look at some of the exciting news which has happened within the week. So if we start by looking at Tuesday, we saw that Fed, the US central bank, cuts interest rate by 0.5 percentage point, also called 50 basis point. It is the biggest single cut in more than a decade, and they did that as a preemptive move to protect the economy from the current CV situation. Initially, that led to an increase of the S&P 500 by 1 percentage point, but at the end of the day, the market actually ended up being down 2.5%. So why did the market drop 2.5%, even when the Fed were cutting the rates, which is supposed to be beneficial for the markets? My guess would be that the market would have expected a more coordinated effort from all the central banks around the globe, and not just the Fed. On Friday, we had yet another exciting news on the stock market, which was the US nonfarm payrolls, which is also known as the king of key figures when it comes to economic data. So the initial number was 273,000 new jobs being made within February, which is way above the analysts' estimate, which was 175,000. However, the number has later been revised down to around 190,000, but it's still above the analyst's estimate. So this should speak in favor of a rising stock market. However, the stock market was still down on Friday due to the CV outbreak. So despite the fact that we have seen the biggest rate cut within a decade and a job report which was better than expected, these two economic indicators should speak in favor of an increase in the stock market. So what is currently going on that is so severe that even these two really positive news is not enough to bring the market up? And the obvious answer is, of course, if you have been following this channel or simply just seeing any news within the last month due to this global CV outbreak. It is actually driving the VIX index severely down. The VIX index is also known as the index of fear. I will leave a link in the description below. Hence, I think it's time to quote Warren Buffett: "Be greedy when others are fearful, and fearful when others are greedy." So what did Warren Buffett actually do? Well, he went out and bought 1 million shares in Delta Airlines. I currently only have 17 shares. So you can say that he is really putting his money where his mouth is. So that concludes why most investors lose money when they initially start investing, and the news and an update for my portfolio. So now let's head over and look at some of the questions which I have received within the week. So the first question I have received was actually more of a request. If I could try and highlight what my estimated yearly income would be from dividends. So if we look at column N, here you can see what I expect to receive for every single company in dividends within the year. So I have summed all these numbers in the dividends tab. So yearly dividends estimated, and then I of course multiply it by 0.85 in order to get the number which I will receive into my account after I have been paying the 15% in US withholding tax. And underneath I have added what I have received year to date, meaning it's simply just a sum of column B over here. The next question I have received was if I could try and highlight a bit more when you should consider selling. Since I mentioned in the guidelines episode, meaning episode 2, if I don't believe there is a future in the company, then I will really be thinking about selling the company. If they cut their dividend, that is for me somewhat of a two-folded story, because there can be good reasons for cutting the dividend, but usually it means that there are big troubles in the companies, since you can see, for instance, a company like Boeing, where they have had 2 plane crashes within the year, and currently they are paying out more than they are earning, meaning that they have a payout ratio of more than 100%. So they are actually taking up debt in order to keep the dividend. So if you look at it this way and say, if a company is cutting the dividend, then it's because it's in huge trouble, and then it would most likely be a good idea to actually sell it. But what I do and what you do could be 2 very different things. That is why I put this as guidelines and not as rules as such. And then of course the third possibility, or the third guideline I would say, is if you are holding a company where you think they are extremely overvalued, then I would of course also consider selling that. So the next question I have received goes like this: "Hey Lazy Money Game, do you have any recommendations to which stocks I should buy now?" That is a really easy question for me to answer, since I do not give any recommendations. The closest thing you will get to recommendations from me is look at the guidelines and do your own research, because you need to feel comfortable with holding the company, even if it goes down 10, 20 or even 50%. And you will not be comfortable if you have just bought the stock because someone recommended it to you. So always do your own research so you are comfortable with the companies that you are actually owning, because you are buying a piece of a business once you buy a stock. Next, I want to address that it is Women's Day. And why do I want to do that? Well, if we look to the statistics in Denmark, we can see that it's 80% of the men who are investing and only 20% of the women. And that means that there are a lot of women who will never become financially independent because they won't make money while they're sleeping. So there will be no equal rights there. So I hope that you will recommend your girlfriend, your wife, your mom, your sister, your daughter or your friend to start looking into investing, whether it is by looking into this channel or other YouTube channels like The Financial Diet or other sorts of medias. simply just for them to get starting, putting some time into investing in order to gain equal rights. So that concludes yet another exciting week on the stock market, and hopefully you feel that you have gained some new knowledge. That was at least the intention. So feel free to like, comment and subscribe, and as always you are more than welcome to ask questions. So that was it for now. Bye!